Kitt.
Hi.
I am so excited today because we're actually speaking with the co-founder, president, and partner of Wish, Kitt, and he's going to tell us a little bit more about that. But first, Kitt, I would like you to tell us about yourself, your role, and your background, please.
Yeah, no problem. So yeah, Kitt Doucette with WISH, which stands for Wildfire Insurance Solution Hub. I have an interesting background in insurance. It's a family business. I'm the fourth generation now, Doucette, that is in the insurance industry. Didn't come here directly, but sort of through a winding career path that started as a journalist and writer, and working for magazines through kind of the early 2000s into till about 2018. And then founded Adventure Concierge Travel Service, co-founded Adventure Travel Concierge Service called Stoke Broker. And during that time, we hosted a trip for a guy named Michael Dubin, and he was working on the problem of wildfire, doing it through a nonprofit called Safe Woods. And I met a few real key folks in the wildfire world, one of which was George Whitesides, who's now a congressman from the Los Angeles area. But before that, he was working as the CEO of Blue Origin and some of the other space tech firms, and really sort of opened my eyes to this growing problem of wildfire. And I had worked as a journalist covering some of these fires, especially when they threatened my hometown where I grew up in Idaho, Ketchum, Idaho, in 2008, and then again in 2012 we had a couple of fires come very, very close to the town. And I was embedded with these hotshot crews and wildland firefighters and was just stunned by the type of work they were doing and how they were thinking about the fire, how they were trying to get ahead of the fire, how they were using things like controlled burns and prescribed burning, and fire lines, and integrating with municipal water systems, but also resort water systems and private home water systems. And they saved every single structure in the town. And this, looking back, I still am blown away by that, by the fact they were able to do that. I'm sure we got a little lucky with some things, but it really sort of opened my eyes to what was sort of thought about as a very scary, uncontrollable force, wildfire, and then seeing with the worst conditions possible, with the least amount of time available, the things they were able to do to protect a town or a structure or infrastructure or a lodge, um, just stuck in my head. And I remember writing the stories and going to the National Institute of Fire in Boise, and learning as much as I could about these fires and really coming away with, wow, they're certainly increasing, they're certainly scary, but they're also very manageable and controllable in their own way. And if we get enough effort behind it and enough time and enough resources, that there's incredible things that can be done to create safety or manageability within this very scary wildfire, I guess, incidents. And so kind of fast forward to 2023, and I just exited Stockbroker and was kind of looking for something else to do, and really kind of focused on climate resilience and what we can do to get more prepared for the coming disasters of a changing climate, I guess. And sort of landed on wildfire and had some really interesting discussions, and then also got sort of approached by my family, my dad and brother, who were working on an insurance company, an MGU in Hawaii, and had just become aware of Hawaii's risk for wildfire due to the drought and some conditions. This was kind of late 2022 when we started to have these conversations into early 2023. Started working on the wildfire peril to see what we could do as an insurer to prepare our carrier partners and our underwriters for that growing hazard, growing peril. And then August came around of 2023 and Lahaina. And that really catalyzed my journey into wildfire resilience through insurance availability and cost, which then created the founding of WISH, which the WISH mission is all about connecting wildfire mitigation and resilience directly to insurance availability and cost. And how we started to do that, we can talk more about as it goes, but that really launched. And so my second child, a daughter, was born on October 28th, 2023. And at that same day, Wish was born as well, and formalized the name that very week, and have been on entrepreneurial journey in the insurance industry ever since.
Such a beautiful story and so fascinating, and it sounds full of passion, honestly. Can you tell us about your product and the value that you offer your customers?
Absolutely. So one of the things we learned operating a MGU in Hawaii focused on the peril of hurricane wind was that there are a lot of individual features beyond just an age of home or type of construction or type of roof that really help increase our resilience and reduce our risks for hurricane level wind. We are also able to really understand hurricane wind as a single peril and what makes it so distinctly different in a place like Hawaii, which is a small landmass in a giant ocean, in comparison to a lot of the rating models and hurricane models were based off of the southeastern United States. And there, the farther inland you are and the higher elevation you are, generally the less risk they assume you will have for wind because the storm dissipates as it moves inland. Um, in Hawaii, in small land masses, especially ones with large mountains and a lot of topography, that couldn't be further from the case. It's almost the inverse. The wind speeds actually increase as you move inland and higher elevations, as the wind gets pushed into these canyons and accelerates at a rapid pace. So, understanding that, we were able to come in with a very unique product in Hawaii focused on hurricane only and really using not just geospatial positioning and what we knew from wind speed up and the new wind maps that were emerging around Hawaii, but also that there are very specific features that an engineer would point to that help a home withstand hurricane force winds. And these don't necessarily have to be a whole new home that's built to the newest codes or anything like that. They can be retrofits on an existing home, an existing roof. So we really bored down into the engineering and science behind it. And I tell that story because when we're approaching the wildfire peril, we wanted to take what we'd learned from a feature underwriting and rating approach, which we call FURA, attached with the type of focus you can have when you're on a single peril. So we really established that how we wanted to approach the wildfire peril was as a single peril. And that is really at the base of our product, which is the Wildfire Indemnity Single Peril. We call it WISP. So that is the base product. And what it takes is a very transparent and we think reasonable approach to finding a mutually understood starting point of your level of risk. So being very transparent about the model we use, the risk model, making sure that it's a third party verified, government sponsored type of model. So it's not tuned to any one entity or company or business, and really sharing that directly with the homeowner and saying, okay, this is your general wildfire risk. Is it the most accurate? Maybe not, but it's the most agreeable and the most transparent. And it's a starting point. And that was a really important step that we took. Once you have an agreeable starting point, and we've created what we call your unmitigated base rate, which is just basically saying if your structure is on this polygon or this 30 meter by 30 meter square, what is the risk that wildfire will come onto the property or ember cast will come into the property and potentially ignite your home, your structure on fire? Since we were able to create this mutually agreeable, transparent starting point of an unmitigated base rate, WISP, the product, can really focus on the different features that homeowners, along with the communities and neighborhoods they live in, can do proactively to reduce their risk of wildfire, ember-borne external ignition of their structures or of their property. And through some really exciting coursework and science and data work with providers like the Wildfire Institute at Cal Poly here in San Luis Obispo in California. We were able to bore into these distinct features that help homes and the communities they reside in to reduce their risk of being ignited by embers or external ignition. There's a whole lot of other science going around now about heat transfer and structure density within these neighborhoods to really also understand that if you're within, let's say, 40 feet of your neighbor, if your structure is within 40 feet of your neighbors, there's not a whole lot you can do to reduce your risk if your neighbor isn't reducing their risk. Because if an ember storm comes in, you have done everything to your house and it doesn't, the embers do not ignite your structure, but they ignite your neighbors, then that radiant heat from a burning home becomes a whole lot more difficult to mitigate than the embers themselves that we can do a lot. We understand a lot about how to reduce that potential hazard. Um, Radiant heat, if you're a certain distance, you're only as safe as them because if their house goes up in flames, radiant heat can transfer to yours. If you're stick construction, which most homes still are built with wood framing, that radiant heat's going to get through a lot of defenses and ignite your home. So taking those two kind of understandings about it, and then also really separating out the peril of wildfire, at least for a rating and reinsurance perspective, has been really advantageous with how we're able to approach this particular peril. Because the risk of wildfire that so many primary carriers are concerned about or very nervous about is the risk of conflagration, of catastrophic wildfire loss, where numerous structures within a neighborhood ignite, creating widespread conflagration, structure to structure spread, and resources get overwhelmed. And then it becomes evacuation and saving life, not homes or the built environment.
Yeah.
Um, that risk is very, very different than traditional home fire, which, for those of us in the industry, understand home fire is high frequency, low severity type of peril. Wildfire cat risk is generally much lower frequency, but much higher severity. So
Right.
when we try to mash those two perils together into a single fire peril, it dislocates the reinsurance market and creates a lot of difficulty in establishing the efficacy of wildfire mitigations because it doesn't matter if you have zone 0 and a class A fire rated roof if your lithium battery in your garage has thermal runaway and blows up and catches your garage on fire, or you have an oily rag near a furnace and that catches your internal home on fire. Those fires are going to continue to happen. They're usually much more frequent, but much lower severity. They don't generally resources can get there in time, contain the spread of the fire so that it's just a single home rather than multiple conflagration. Um, and it's in multiple conflagration that the reinsurance gets really tricky too, because they can cap their losses. So they're much more interested as a reinsurer in cat style losses where they can say, well, let's take a gamble. We'll take this $200 million gamble, protect that level of your risk, but the chances of that happening are fairly low, compared to a home fire. So we're more interested in supporting a single peril product that we can hit a home run on with our investment rather than trying to support a book of homeowners that, reinsurers don't love a 60% loss ratio. A primary carrier like State Farm or Liberty Mutual loves a 60% loss ratio. That is all the business that they're really allowed to do, has to show that. With reinsurance, they love it when you have a 0% loss ratio because that's what they're betting on, is that this year you won't have this hazard and they'll be able to take the premium without any payout. So that's kind of the business structure behind it, really enforces the idea that we need to look at the wildfire peril differently than a general fire peril. And I also think that's where, when we're talking about the failures of the FAIR plan in California, which has been such a topic of interest this year, why they're having such a hard time, and homeowners package policies that are trying to include this new wildfire hazard level in a very old structure and a very old kind of dated process around underwriting and the granularity of the risk and everything like that has just created, has just broken the system or the playbook, however you want to call it. And so, there's a lot of challenge there, but then there's a lot of opportunity. And that's really where we see ourselves stepping in and approaching this challenge or the challenge of wildfire insurance on three different levels, right? So that kind of gets us more into the company of Wish and how we're doing it beyond just the establishment of this wildfire indemnity single peril product.
Hmm. Wow, it's got the potential to be so technical on so many aspects, it sounds like. And and it's also a very unique product that you guys offer. Can you tell us a story, Kit, about a specific client that you've helped, and just to show our listeners the value of your product?
So currently working with the MGU in Hawaii, Hawaiian Hurricane Group, to help them create a first to the market, unique all other peril program that
Mhm.
blends in with our hurricane only policy, and creates a homeowners package policy, the type that mortgagees and lenders would need for any type of mortgage. And we're able to help this MGU underwrite and rate the peril of the wildfire for a large amount of policies very quickly. And that's through our kind of transparent engagement. We rely on a number of different steps and representations from the consumer, which creates opportunities to educate and help the insured become more aware, along with the agents, independent agents and brokers, who we really think have been an underutilized piece of the industry to help their communities and the clients who trust them to really understand, why are they getting a non-renewal notice from their insurer? What can they do to help create a more favorable picture around their property for the insurer? How can they help document and monitor the different features that help reduce the risk of ember ignition and stuff like that? So really integrating with the MGU has about 600 agents spread around the Hawaiian Islands. And so we'll be integrating with all of them to help their clients um, create this trust around the uncertainty and sort of fear of wildfire, and really help them see that, no, this is a manageable peril. This is something that you'll be rated on your risk, but it is not the end say of what your rate will be or what your premium will be. That there is a whole host of ways that you can help lower that cost and increase your safety and resilience at the same time, and those of your neighbors. So really, that's kind of the first entrance into the market, and the product is with the Hawaiian Department of Insurance right now. So we're hoping to file it as an admitted product, which also makes it quite unique because any other kind of wildfire specific product all exist on the extra and surplus lines market right now. There's no admitted carrier that's able to rate for the peril of wildfire in as I think dynamic and granular of a way as we allow for it. So that's sort of a real world example. We are in the process of creating a sister MGU to the Hawaiian Hurricane Group called Western Wildfire Group, and that'll be launched in the Western region in 2026 and early 2026. And we're also have the opportunity to pursue some funding for our own carrier capacity so that we can really come in and help push the industry along with our own paper to help, I'd say, fill some of these gaps in products and services that current carriers are feeling and trying to work through.
Yeah, well, thank you for sharing that. It definitely provides insights. So, with everything that you've just mentioned, does this create trends in your industry or in your specialty?
I really think there is a growing trend, a growing consensus from reinsurers on down
Yeah.
that mitigations matter. And when we're talking about wildfire and we're able to segment out what makes the wildfire peril so difficult and unique compared to traditional homeowners package policies, along with the ability of new technology to help establish, understand, and capture granular level risk along with features of an individual property or home. Um, it's creating, I think, the right type of momentum and consensus in the industry that this is the way forward, that we're not going to be able to kind of regulate or price our way through this particular peril, that the
Mhm.
way through it and to move society and the industry forward together is through understanding and supporting mitigation and
Yeah.
climate and building climate resilience into the partnership that insurers should have with their insureds. And I think the trend of, uh, in all honesty, I think the insurance industry has spent a good portion of the last 5 decades digging a pretty massive public relations hole for itself and fomented a lot of mistrust and misunderstanding about one, what insurance really does, two, who's behind it and what makes those companies go, but mostly with communication and trust and saying, how do we partner with our insureds to create risk reduction and climate resilience rather than just using our data and models to point out where climate risk exists and then using that as a reason not to insure somebody. And
Mhm.
I think wildfire has become a flashpoint, forgive the pun, but around this partnership and risk control, loss control, risk management that has really been lost, and transparency, because the trust comes from transparency. And when somebody doesn't understand why their wildfire risk score was this number, this random number 1 through 100, and that number means that it's beyond the appetite of their carrier that they've paid for 20 years without a claim, and they don't have any next steps to say, how can we work with you? How can we help you reduce your risk and become more insurable around this peril? There's been nothing like that. And I think it's far time that the insurance industry starts taking a much more active and engaged role with climate resilience risk mitigation and risk reduction.
I agree, and I'm glad you're talking about this because it sheds some lights for listeners too. I mean, in them realizing the mitigation of their property or whatnot. Um, so, how has this trend affected your growth strategy? Or I'm guessing it's kind of opened the door because you're listening to what is needed and you're sort of providing a solution. Am I right in assuming that?
Yeah, I mean, it started with how do we create an underwriting platform and
Yeah.
product to help
Yeah.
quantify and rate this risk. And we've completed that. That's been an exciting year working with actuaries, working with engineers, working with wildfire scientists, working with mitigation
Wow.
specialists to really develop this rating approach and program. And then seeing, hey, there's a whole lot of need for this, and there's a lot of demand, and it keeps growing as the insurance availability crisis widens and spreads outside of California into other Western states, into places like Hawaii, into places like Canada, into places like North Carolina and Florida, who are dealing not only with the wildfire peril, but also the hurricane peril. And we really saw an opportunity to expand our services outside of Hawaii, use what we've learned as a single peril, single lines provider there, along with all other perils, to create our own MGU that helps admitted carriers and homeowners and independent insurance agents provide this type of product. And then it continues to grow because then when you start looking at the MGU, then you start talking to primary carriers who might be of use of your services, and you realize that a lot of these bottlenecks come from these legacy institutional carriers who don't have the flexibility or the vision or the desire really to do things differently. So then that opened up a whole nother opportunity to create our own primary carrier focused on the wildfire hazard and peril. And that's really exciting too, because then you're talking about moving upstream of the technology product and the MGU to help deploy that product into a capacity provider that really can put some teeth and weight with capital behind this and create reinsurance relationships that are far more straightforward than the ones currently available through kind of legacy carriers, I would say.
Well, congratulations. It sounds like you've done a lot of work towards that goal.
Yeah,
Yeah.
it has been a lot of work. It is a lot of work, and I liken the insurance industry to sort of a giant ship
Yeah.
laden with gold. So they've got a lot to protect, and they're huge and heavy. And that combination makes it very, very hard for them to change course or create new types of thinking. And so it's been a challenge and I think an opportunity in trying to be that little tugboat that pushes that giant ship laden with gold into a different direction. And I think we're on the path, I think we're just starting down that path and there's a lot longer to go, but you're certainly seeing reinsurers and independent insurance agents and communities, whether they're homeowners associations
Yeah.
or municipalities, really start turning towards this idea of mitigation forward approach to the hazard of wildfire. And once we can separate that peril and say the main risk of wildfire is ember-borne ignition, and we have a lot of research and a lot of data around things that homes and structures can do to prevent ember ignition on the exterior of their home or by embers getting in through vents or whatever into their home.
Yeah.
Uh, I think we can really take a bite out of the uncertainty that's currently around wildfire because right now the industry is trying to use whatever models they have or whatever new models are coming out to try to predict the risk and how much the loss is, but you know, they're all stochastic. They're guesses. and the rates of divergence are such that no reinsurer trusts them. And their proprietary and black box type style, so the consumer doesn't even trust them because they don't want their home to get run through some black box risk analysis that's going to tell them they're uninsurable, when they know darn well that the fire station is 2 blocks from their home and they have fire hydrants right there and they've done their defensible space and their town has, a mitigation budget that they're using to help create kind of, fuel breaks and fuel management and they've done all the hardening to their home, they know their risk is less than that box is telling them. But since the insurer is the one operating the black box, they don't even get that opportunity. And legacy insurance companies, certainly these, primary carriers, look at risk. I mean, zip code by zip code, maybe census block, but that's as granular as they get. And that just doesn't work for the way the peril is sets up and what needs to be done when it comes to home hardening and community resilience and mitigation.
Awesome. Well, for our closing question, where do you see Wish in the next 6 years to 1 month?
6 months to 1 year or
Yes,
six, yeah, six.
yes.
So
Sorry,
yeah,
I
no
missed.
problem, no problem. So currently we have the technology platform and the underwriting platform built. We've designed the single peril product and we are ready to deploy. In the next 6 months, we'll be propping up our own MGU in the Western region. And then hopefully within the next year, we'll be domiciling our primary carrier in Idaho. So
Wow.
so I would say, yeah, within 6 months, let's get the MGU going. Let's have, proven success of deploying this technology and rating approach within the market. And then let's look forward to supercharging that MGU with our own capacity as we raise funds around a resilience-focused primary carrier in the insurance
Very
industry.
nice, very nice. Best of luck with your plans.
Thank you.
So I just wanted to thank you so much, Kit, for being here with us and for sharing all this information, these nuggets of gold our listeners. And may I share your contacts?
Yes, please. We are actively engaging to have as many conversations around this topic as possible with as many different entities within the insurance industry ecosystem. So the more people that are talking about this and that look to sort of understand what the science and research around mitigation and specifically when it comes to wildfire mitigation is moving towards, the better, I think. And so that's what we're up to right now.
Excellent. So they'll be posted in the comment underneath, but just
Okay.
for the purpose of the video, um, there's wildfireinsuranceSolutionHub.com. That stands for
Mhm.
wish.com. Kit at Wildfire Insurance Solutions ins.com is Kit's email. And he
Wild Kit at
uh,
wildfireinsurancesolutionhub.com is my
hub,
email.
sorry,
Little, no
oh,
problem. Little bit
I
of a
I
little bit of a
forget.
mouthful, but it's and you can also get to us by Wish Insure, WISH insure.com. That takes you to the kind of, if you don't want to type in wildfireinsurancesolutionhub.com, you can take the shortcut.
Excellent.
So
Thanks for helping us out. And you can also reach Kit via LinkedIn. I noticed you're there,
yes,
right? So
yes.
thank you so much once again, Kit. It was very enjoyable and an honor to have you here.
Thank you, Carolyn. I so appreciate your interest and look forward to many more conversations together.
Same here. Thank you so much.
Okay,
Have a nice
thank
evening.
you. You too. Thanks, everybody. Bye.